Let's rock and roll. All right, let's see if we are on. Man. We should be streaming. Bear with me, family. Bear with me. I appreciate each and every one of you guys on here. Tonight's going to be an amazing night. So I want to make sure that we prepare and get right. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. All right, family. I appreciate each and every one of you guys on here today. My name is Anthony Tirado, Forex educator inside Elevated FX. You know, I wanted just to take a step back. And for those individuals who aren't aware, that's Bob Proctor you were listening to. Some money affirmations. You can type that into YouTube. And whether if it's in the morning, before I'm going to get some rest, you know, I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources, right? On a continuous basis. Let me say that one more time. I'm so happy and grateful now that money comes to me in increasing quantities through multiple sources on a continuous basis. You see, a lot of people, you know, you're tapping into this platform, and for everyone who's on here, I know we have people from different backgrounds, maybe different packages within our ecosystem. So I wanted to make sure that you understand that inside Elevated FX, inside what we have put together, is truly allowing you to open up, right? And right now is that time, especially like I do this on every Sunday. I get my mind right. I get my week set up, already preparing for the week ahead, so I know what I'm looking for in the markets, right? And already being able to identify that gratitude and what you're happy and grateful for, and that money coming to you from various quantities and multiple sources, right? We want to be able to tap in and hold ourselves accountable to that, right? So the first thing I wanted to do is, today is Sunday setups. I know there's a lot of questions. Let's see. We got a few people on here. Facebook user, Lachelle, Joseph, and everybody else. Listen, do me a favor, tag your friends, send them this link. Let's get them inside the ecosystem, because I want to share so much that's going to help you just elevate to the next level. You know, the first thing I want to do is I want to make sure that everyone understands how everything works, where you can get the access, right? Because the same way that you have access to these tools is the same way that I have access to these tools. The same way that you can go in your back office and download the success manual is the same way that I went into the back office and downloaded my success manual, right? Because this is not just a Forex company. Elevated FX is truly freedom through automation and applied education. Let me say that again. Freedom through what? Automation. Using the largest financial markets and having resources and tools working smarter and not harder. And applying that education. Tapping in, learning in through educators like myself, IT, Osman, you know, masterminds behind this operation, so you can dominate and elevate to the next level, right? So what I want to do is I want to make sure that everyone has access to the Discord community, because not only do you need to have access to the Discord, you need to verify your Discord, right? Inside the Discord, this is where everyone should be, the hub, the trade talk, the trade setups, the analysis, the webinars, right? So for everyone who has all of those questions, where it needs to be, the Discord is where it's at, right? So when you log into our back office, you'll be able to click that link and click our Discord. But let me actually head over here so you guys can access that. But in the meantime, I also want to review where our resources are inside Elevated FX, right? Because the first thing you should have is obviously access inside to that Discord. But now I want to make sure you guys are tapped in, utilizing our softwares, our solutions, testing them out,
identifying how you can get access to the pullback pips indicator, right? And then we'll talk about this amazing success manual, right? Because on Sunday, you get set up. So let's head over here to Discord. If you haven't done so, go into Elevated FX, go into your back office, and you'll be able to click on our Discord link. There's a little logo on the homepage, and it's going to take you here. Right? Because a lot of people don't understand. We're all starting at a foundation, right? So the first thing that you need to do is when you join, literally, is type in !sauce, right? I want to do it, but I want to make sure you understand that it literally needs to be just like it says, ! and everything lowercase, sauce, right? Because if you do it with the uppercase, I don't believe it's going to work. It needs to be exactly, right? If you do it with the uppercase, look, it's not going to work. So you need to make sure that everything is with the lowercase. And now you're going to get that inbox. You see the inbox that I just received? So you click it, and it's going to say, if you have an active subscription with Elevated FX, you need to type in !link and then your email address. Just like this format, ! lowercase link, your email address, right? And once you do that, it's then going to give you access, depending on the package you have, into our specific channels. If you have the all-in package, you're going to have access to all of our channels. If you only have the Enigma FX setups, well, guess what? You're going to have access to your Enigma FX setups, right? A lot of people ask me, how do I get access to Enigma? The first thing you need to do is verify your account. Once you get verified, now you can go to FX setups and identify the trade alerts that are coming in. The first thing I want you guys to understand is these are what? Trade alerts. Let me say that again, because I want to make sure everybody understands. These are what? Trade alerts that are giving you your entry, your bias, your stop loss, and your target profits. Simple. The easiest way that you need to do is literally grab that information. You literally grab all this information. So if we're selling EuroCAD, the entry literally gives you the entry, the stop loss where you should be managing your risk, and some targets, right? Now, for those people who've been taking advantage of this Enigma system, right? Let's go to our Enigma profits, because these are literally consumers, individuals like you and I tapping in, and look at that, seeing profits. I don't know if you can see that, but this member literally made $3,000 on EuroCAD sell. Sheesh, right? I don't want to talk about the numbers, but I just want to let you guys in. When you're tapping into the right solutions, you're going to see the right results, right? Look at this. This is you literally applying yourself, identifying these trade setups. And I want to make sure you understand how to do that as well, right? Literally, look at that. Took the AUD CAD trade on Enigma, and I closed out. Ooh, look at that. $54. Listen, no matter the size, no matter the profit, I want to make sure you guys are seeing that with this system. Yes, you will have losses, right? With this system, yeah, you're going to see some red. But overall, you should be seeing more blue than you are red. And if you're seeing more red, it's for various reasons, right? Let's look at this example right here. Here, let me come over here. I want you to see that this person literally is taking these trade alerts, right? And some of them are winning, some of them are losing, some of them the stop losses are getting hit, the TPs are getting hit. That's the way you trade, right? You're not going to trade all of your risk on one account, on one trade. No. With this system, I'm going to let you guys in on a few secrets. So let's literally, you can go into your Enigma profit zone, and you'll see all these other profits. I'm not worried about that, right? My main priority now is how can I go from where we're at right now and make sure that each and every one of you guys are tapping into these alerts so you can see some profits, so we can post some more profits for this upcoming week, right? So the first thing I want you guys to do is grab your success manual. Seriously. Grab the PDF, tap in and grab in your success manual, because in here, it literally breaks down everything you should be doing on a step-by-step basis, from holding yourself accountable in the market, right? Here, matter of fact, I think I literally grabbed the page, right? When you're trading, you need to be able to hold yourself accountable and identify, why are you getting in the market? Why are you losing the trade, right? You're going to win some, right? You're going to lose some, but overall you should be winning more, right? And the great thing is we've literally put together inside your success manual the blueprint, because a lot of people don't understand there's a blueprint and a systematic thing that I've been doing to stay consistent and to stay profitable, right? It's mindset, cash flow, invest. We need to have the right mind. We need to have the right structure of these resources and tools so we can identify those cash flows. And once we have that cash flow coming in, we can properly invest and diversify that beast, right? So you're going to notice here, this is literally the old one. I had to go in, and since I'm in a new month, each and every month, I hold myself accountable. I'm just letting you guys in on what I'm doing that's already helping me get these six-figure accounts funded, passing challenges, now taking on verifications, right? Because this is the problem. The problem is traders don't understand that the biggest thing they're going to have is they're not going to be honest with themselves. You know the answer why you're losing. Are you over leveraging? Are you trading at the wrong time? You know why you're losing, because you're trading a $500 account, a $1,000 account, $5,000 account, and that's the problem. I understand you got bills at the end of the month, but if you're trading $500, $1,000, and you're trying to pay your bills or you're trying to pay your subscription, you're going to over leverage. You're going to try to make 30, 50, 100% gains. But what happens when now you have the proper resources, the proper tools, and the proper funding? I'm talking about now you can tap into 6, 7-figure accounts. Now, me and you and I, everybody on this call, we're on the same mission. I'm on the same mission with you, getting verified, getting funded up to $2 million. I don't stop at that. Nothing less, right? I'm getting funded, getting verified up to $2 million. That should be everyone's mission, because now when you do 10% of 200,000, that's already 20,000. And if you're getting 70, 75% of that, that's easily a 6-figure trader right there, just by having the right mindset and understanding that these resources exist, right? So I want to show you guys, the first thing that you need to be able to do is identify your time. The first thing you need to be able to do is hold yourself accountable to why you're entering a trade. You're going to notice every time I get in a trade, there's various things I have. 2 confirmations, because I have my pullback pips indicator, I have my 2 confirmations, and then I have my checklist. Everybody has this in their back office, right? So when you're doing that, you're holding yourself accountable. I'll be honest, I've over leveraged, I've blown accounts, but best believe I've been able to hold myself accountable to seeing why I'm doing that. Why did it happen? Why did I win this trade? What did I do, right? Why did I get in? Why did I get out, right? Hold yourself accountable. Stop wasting time. What's taking me 6, 7 years can literally be done in 6, 7 months. Why? Because these resources didn't exist in the past, right? So what I want to do is, with this Sunday setup, we need to get right. Everybody, already from day one, please do me a favor, tap into our Discord. And the best thing I would suggest is get active, right? Get active with some of our members. Communicate. Tap in to our trade talk, right? And see what others are doing. Ask questions, because we're all here as elevated traders to help enhance our experience and get to that next level, right? So what I want to do tonight is, once you have access to this, you're in. You're in. It's game time, right? So let's head over, and when you go into your Elevated FX, right, it's simple. Everybody go into your client area. I want you to log in. And once you log in, you'll be able to have all of the amazing access into our resources. Give me 1 second. Bada boom, bada bing. And I just want to show you guys just a quick walkthrough of where everything is located, right? A quick walkthrough. You know what's crazy? I don't know, but there was something, because I know my internet is killing me. My internet is looking at me and it's saying, man, Anthony, you got the stream going on, you're dropping the sauce, and now best believe it's time to take it to another level. So when you go into your back office, everybody should click that join Discord if you haven't done so already. When you go into your products, this is going to be when you're going to be able to tap into all of everything we have access to. I'm talking about learning about the softwares. I'm talking about learning about Forex and your mastery in the skill set. I'm talking about, if you need more questions about the FX Capital and Funding Program, you need to click that link and get your answers that you're looking for. right? For those individuals, I want to make sure everybody does this. I want you to go to FX Mastery, right? Because not only is it myself, we have various educators inside this ecosystem here to help you guys evolve and elevate and take things to the next level, right? Now, when you go in to our FX Mastery, you're going to have our playlist that breaks down all of our different education, our lessons, our modules that I want you to start tapping into. But for tonight, I want you guys to make sure that you click on this link right here where it says access the software, because I'm going to show you guys an amazing software that I've put together inside Elevated FX that's going to help you as a manual trader, right? So when you click that, it's going to give you a form for you to fill out, I believe, just two things: your name and your TradingView username. And that's going to give you access to the Elevated FX pullback pips indicator on TradingView, which I will be discussing tonight, right? Because aside from having these automated resources such as Alpha, Cash Pips, Shinobi working on the back end, we also want to make sure we fine tune that skill set as a manual trader, right? Now, if you guys have any questions, doubts, or hesitation, shoot me a message on Discord. Reach out to our customer support team. Seriously. They are here 24/7. They get paid to be awake 24/7, answering any doubts and hesitation you have. So I'll just literally just do a quick, hey, I have a question. And literally in less than a few seconds, one of our customer reps will get on there and see what's going on with you, right? Look at that. Christian's already ready to answer, right? That's how simplified we've made it to making sure that each and every guys has all of your answers taken care of. If you have a question on how to set up our VPS, right? If you have to go to our cloud VPS and you need to set it up, well, guess what? Here, let me go to my cloud VPS. I'm going to log in, right? For everybody who has access to your VPS and you have a question, they are here to answer those questions, right? They are already trained on the back end to understand how these softwares work, right? So now it's time for us to work. It's time for us to trade. It's time for us to tap into TradingView and do what we do best on the markets, right? So I want to take a moment and let's just get back. Let's take it a step back, because I know we went over trading. I mean, we went over the Elevated platform. We went over the resources. We got the Enigma software. We got our FX Mastery, and we have our automated resources that we have. Check, check, check. Do you have your automation running? Do you have your VPS set up on a demo account, right? These are questions you're asking yourself. Do you understand how to take your Enigma trade setups? Because we do have a training in the back office for your Enigma, right? And aside from that, am I plugged into all of the possible resources and tools inside Elevated FX, such as making sure I have my success manual printed out, making sure I have access to my pullback pips indicator, making sure I have access to that Discord, making sure that those alerts, I'm getting notified when they send out. Every time an Enigma alert sends out, no matter the time of the day, I'm getting the alert, right? So I want to make sure that we're all on that page. And now we can jump into the markets. Now is the opportunity where each and every one of us gets to analyze the markets, get prepared since it's Sunday. We know the markets are open 24 hours, 7 days a week if we're trading crypto. So we need to have a day where we get stable, where we get set the foundation. And that's today. Because since the markets are just opening, I want to already give you guys some tips. Your Sunday should be your prep day, getting prepared if you didn't do it over the weekend, right? Everybody should have access to TradingView. Now, when you go into TradingView, this is where you need to make sure that you have your username information, all of that amazing stuff, right? Here, let me just take this bad boy exit out of here. Oh, I'm actually really upset. Oh my gosh, I'm really upset. It was funny because I was looking for this setup right here on gold, right? And we could look at it for a little bit. But I literally had this pending order right here that I was getting ready to execute. But literally it was right into our 9 o'clock session. Sheesh, it's okay. It's all good. But it's good to see that this bad boy did exactly what I needed it to do. Came in perfectly, hit that wick area, and took off 36 pips. That would have been a great way to start the week. Regardless, what I want to do today is, man, let's talk about these markets. Let me know what you guys are looking at, please, because we can look at anything. The first thing I want you guys to understand is this journey you're going through is not you looking at somebody else's journey. It's you truly evaluating your journey, yourself, identifying what do I need to do to get to that next level, right? Let me come over here. Let me try to just exit out some of this stuff. The problem was when I got started trading, I wanted to see what was always working for somebody else. I'll jump from strategy to strategy, course to course, pair to pair. I remember at one point I was trading the USD, the Mexican peso, the krone, right? These random exotic currency pairs. And I want you guys to understand that this is going to be the best and the easiest and the simplified, elevated way to enhance your trading right here. This right here. Because once you know what currency pairs to focus on, now you know, based on the schedule that you have available, what you should be trading, right? Because the problem is everybody thinks since the market's open 24 hours, you should be trading 24 hours of the day. But no, that's the biggest mistake, because there's specific times that one currency pair will move when another won't. There was times where you'll see, I call this the blackout zone, right? Everybody should be aware of that. When you're finishing up with New York session and now you're moving into that Tokyo, Sydney session. Yes, right here, blackout, the lights go out, right? And what I mean by that is if you start trading around that time, best believe that when the markets are starting to close and turn into the next chart, manipulation, broker spread are going to spike. I need you to understand this simplified and already helped me enhance my trading. So when I was available to trade at 2 in the morning and I was trading maybe 2 to 6 because I had a 9 to 5 job, well, guess what? I was focusing on my GBP. I was focusing on my euro, right? Do me a favor, screenshot this right now if you haven't done so already. So like, for example, if I'm trading at 10 a.m. Eastern, this is all Eastern right now, I'll be looking at my CAD, my USD, right? If I'm trading the time right now, 9 p.m., 10 p.m., 11 p.m., I'll be trading my AUD, my JPY, my NZD. So let me say that, let me make sure you guys understand this part. By already setting the tone and understanding which currency pairs you should be trading at the right time, now you're actually one step ahead, because you're already at a fundamental level of trading the market. You're trading it when the banks, the large institutions, the movement, the volatility is moving, right? So what we need to understand is now that we're trading the pairs at the right time, now that's already a check mark, a confirmation. I can tell you the times when I lose money is when I'm trading it at the wrong time. The times I lose money is when it's already 3 p.m., 4 p.m. Eastern, 6 p.m. Eastern, and I'm still looking at the charts. Meanwhile, I should just be done. Cut the trade. Refresh your mind, right? So this is the first step that's already going to help elevate you to the next level in your trading, right? So now that you have a currency pair that you should be trading, right? Sheesh, this gold was actually beautiful. Should we talk about gold? Let's talk about gold. Let's talk about gold, and then we'll move into everything else. Why did I want to buy gold? NFP, baby, was nice, right? So right now, do me a favor, family, and in the comments, there should be an area. I want you to drop any currency pairs you're looking at. Any currency pairs you're looking at, do me a favor. I'm not sure if it's like over there, up, sideways, which currency pairs you're looking at. You know, I can tell you which currency pairs I'm going to look at because I already have identified in a schedule what times I'm trading, but I want to know what you're looking at. I want you guys to hold yourself accountable so next week we can evaluate and I ask ourselves, did we trade the right pair that we said we were going to trade? Did I say I was going to focus in on gold, US 30, Euro USD, GBP USD and focus on those? Or did I start trading, you know, something else, you know? So drop it in the comments what you're looking at. I'll start with gold. Gold is a very nice pair if you understand it. If you have the volume to trade it, I would highly recommend it because gold is one of those currency pairs that it's not just impacted on a technical space, but also a fundamental hold space, right? There's banks, institutions, countries that are backed by gold. So you got to think a little bit more out of the box when you're trading gold, in a sense of where are people getting faked out? Where is the market moving? What is gold looking to do? Like, I'm going to give you guys a quick cheat code on gold. If you understand what time you should be trading it, there's a time that it's going to fake you out. And I'll leave it at that, right? If you understand when you should be trading gold, there's going to be a time that it's going to fake you out, right? If you understand. So I'm just going to show you that example, and then I'm going to move into a currency pair that's not gold, because I can't be giving you guys my gems if you're not going to at least drop a comment and let me know what you're looking at, right? So just from that type of understanding, when you're looking at gold, you're understanding manipulation. You're understanding that the players are going to manipulate you and make moves off of you, right? You're going to notice when people are trying to push this bad boy to the upside, they're going to place their stop losses right there. So it was pretty interesting to me that the stop losses got swiped, and guess what the market did? Create the bias of the move. I like how right here you see that the market decided to give everybody a nice sweep for their money, where you could have minimized your risk and obviously maximized your profit. And now most recently, if you look at what gold just did, literally as the market opened, as this bad boy was preparing for its move, literally look at what it did. It came here, it swiped all of the people who were dealing with this, who were holding this trade from NFP, right? Look, this was NFP right here at 8:30 when the dollar decided to go down and gold decided to push up as EU and GU did, right? All of those players were placing stops at these lows. So guess what? The market, before it closed, it didn't even take them out. So they're holding those trades. Why do you think suddenly, guess what the market did? It opened up, boom, take them out. And now we got ourselves the bullish push to the upside, right? So I'm just letting you guys, if you understand that tip with gold and you're patient, you're going to get paid, right? You're going to definitely get paid. Like just from that sweep right there, I already knew I'm looking for my bullish push. That's why if you guys were looking at my gold, I was looking for my entry right there, which I got. I'm not getting into it right now because I wanted more of a manual entry and just wait for it. But I was preparing for this session. But hey, look at that. It's already up 50 pips, right? If you were risking 0.5%, right, your stop loss would have only been 20 pips. My stop loss was going to be minimal, 20 pips. Right now, if you're risking 20 pips and you're up 50, you already doubled. You're already up on that 2-to-1, right? That's why I said I can't get in on this trade right now, because if I was already in the trade, I'd be out of the trade and I'd be looking at you guys like, yeah, we're up 1% for the week. You know what I'm saying? So that's the type of mentality you got to have. I'm a sniper. I have this precision, this understanding of what the market's doing, right? If I know that it's going to keep going up, yeah, guess what we're going to do? We're going to look for pullbacks and take it to these highs, but we'll get there, right? So let's start looking at some of these charts that you guys brought up. That gold was a nice little wake up to get your week ready, man. Get your week right. It was crazy because as I was starting this webinar, the computer started lagging, and I'm just like, holy cow. Like it started showing me all these different screens, and I'm just like, wow. They're trying to hold us back, but they're not gonna. Yeah, all right. Since gold was mentioned, we'll talk about where gold is ready for. Right. Switch JPY. Cool. And then let me actually add in the currency pairs I'm looking at. I'm personally a fan of London session just because around 2, 3, 4, 5 in the morning, it's really quiet. That type of time is just really time for myself, and I could focus, right? I don't like to trade when everybody's calling me. Or like right now, I don't like to trade right now because I know I got a webinar. If I didn't have the webinar and I was focusing on my setup, I would have already, hit your goal. So the priority is understanding when you are trading, why is it focus in on just trading, right? On my schedule, I understand I'm not trading right now. I'm giving the sauce. It's Sunday setups, right? But I want to make sure you understand when you hit your goals and you know what you're trading at the right time, it's game over, right? So I'll be looking at, we can do some Euro GBP. The great thing is the market already had news on Friday. That's the best thing we had, news, NFP, right? It's the second week of the month. You know what's great about that? Now that the week has finally created its news event, right? Think about this. NFP allows the market to manipulate, right? But if you notice, like right here, you see right here at 8:30, I want you to see what happened. NFP allows the market to get manipulative, right? That's why I don't trade news. Boom, at 8:30, the market, the dollar dropped, making EU, gold, GU, NU push up at that time. That's why you see it. And that's why you can't just trade on news, because you always got to be strategic with your entries. You don't just enter at the execution. You have an idea of pending, limit, right? So you literally notice with that manipulation, although we were dealing in manipulation, I still had my bias for the bullish opportunity, right? Even though we had that manipulation in price at 8:30, if you're still bullish on this opportunity, guess what you're really doing? You're entering at these low points, right? So something like dealing with news, I wait for the week after, so now I can continue my setup, right? So let me just drop the rest of these pairs and we'll get started tonight. And we'll discuss that pullback pips indicator, the sauce on there. AUD, USD, NZD, JPY. All right, NZD Swiss, perfect. All right, so let's start off with UJ. And I want to just break it down in the sense of the first thing that you should do is right click on TradingView and click remove charts, right? Whatever happened last week, happened last week. I need you to right click. Okay, we remove the charts. Like you see how we were up on gold. Guess what? I'm going to right click, remove the chart. Whatever happened, happened. Whether if you won, whether if you lost last week, it happened. We cannot let those pass and anything of that nature allow us to dictate how we're moving in this future, right? Like for example, if you look at Euro GBP, I would have loved to been holding my trade that was up here that I was looking to sell at, right? You see how it even came over here, gave it a nice kiss, and boom, dropped, right? So all of that noise, we got to remove it. And the reason I say that is because if the market is still going to be a setup, it's going to still set up. If the market is still going to be a setup, it's still going to set up. So just right click over everything, remove everything, right? Look at that. This was a nice time, right? Look, this is interesting. And the badges, I need you to also remove that. All right. So it looks like for today, we're going to focus more on Sydney, AUD session, NZD, JPY. Some of these pairs are more on that Asian Sydney session like right now. So let's get to it. The first thing we should do is, now that we know what time we're trading our pair, right? When we know that we're trading the NZD at the NZD time, now it's just a matter of being able to identify where is this market moving and how you can get in on your trade, right? So we're going to start off with UJ. And no matter the currency pair, you got to have a process, a systematic process of identifying what's happening in this market. So I always start off on these bigger time frames. Start off on your daily. Start off on your 4 hour. This just gives you an idea to see where is the market at right now. Seriously. You're not trading off of the daily. You're not trading off of the 4 hour. I can almost guarantee nobody is holding a trade for 2, 3, 4 weeks unless it's crypto and they're just long-term holding it, you know, or buying the dips. But that's not what we're talking about. We're trading Forex here. Most of the time when you're trading Forex, you're in the market, you know, at the most 2, 3, 4 days. That's because you're an intraday trader. If you're looking at the market and you're in and out within minutes, you're a scalper. But overall, you still want to know where is the market at. So on your daily and on your 4 hour, I want you to start being able to identify what is the market doing, where is it at, and where is structure, right? So matter of fact, since we're talking about structure, I want everybody to go in. And if you have access to your elevated pullback pips, all you have to do is type in elevated FX, pullback pips, and boom, it's going to be there. When you click it, wait, before you even click it, I need you to make sure you favorite. Add it to your favorites. Here, I'm making sure everybody understands how to get access to your pullback pips indicator. Don't ask me later, because it's as easy as going into the back office, filling out the form, going to TradingView, and now you got access, right? So what I want you to do is when you go into your TradingView and you have access, you're going to put it to your favorites. You can click on your favorites, and now, boom, it's there. Let me click it. Right? It's going to pull back and it's going to be there, right there. There it is. Now, this is a trading system allowing you to enhance your trading as a manual trader, right? So let me break this down. Let's talk about two things when it comes to this pullback, pips. The first one is structure, because we just talked about it. Here, let me start off on my daily. When you're looking at this chart, the first thing I said you need to be able to do is identify structure. What is structure? Structure is these outer points in price, identifying what is the market doing, right? If you notice, when you look at these outer points in price on the daily, if you realize, I don't know if you really notice, but they're casually going up. Each and every one of these lines is casually going to the upside. And this is good because it's helping me see where structure is at. And as it's casually pushing to the upside, let me just show you guys something. Even though you don't trade on the daily level, I want you to understand what is structure, right? Structure is the outer points, right? So if you notice, when you were looking at this UJ and it finally reacted off of structure in a supportive manner, what do you think you're looking for now? If you're looking to take it to the upside, don't you think it's going to start breaking these levels of structures, pulling back, breaking these levels of structures, pulling back as it pushes up? Yes, of course. All right. So I want you to just start to see it, because as the market reacts off of a structure level, as it did right here, now you're starting to see, as it's pulling up, the opportunities for you to maximize the run, catch the pullback, right? So I want to make sure you identify structure and understand it, right? Let's move to where we currently are at. Boop. All right. Now, when you're looking at this chart, this isn't a good example just because UJ is definitely overextended. If you were looking at this bad boy, it would have been more effective to be trading it when it was back here pushing on up. If anything, once it finally broke this first level of structure, that pullback was essential to push it up, and that's because all of this broken resistance now should have turned into a possible supportive area, right? Let's see. But that's why I said UJ right now doesn't look too good in a sense, but let me see if I can find a good example. Let's go to GU, right? GU is a good example. It's not as bad, right? Looking at this GBP USD, the first thing we want to do is identify where is structure, those outer points in the market. And the reason we want to start looking at it in that sense is because once the market identifies a structure level, it's then going to identify if it wants to be supportive or resistant. Let me say that again. You see, these structure levels are not resistant until it's resistant. It's just a structure level helping you identify the outer point of price where it's at. And that's great because in the case now looking at this GBP USD, you can now start to identify, well, if you're noticing these bearish structure levels are going down, right? Currently, it's testing this interest area. I'm interested, what is going on here, right? Because so far, at one point, this was a structured rejection. My question is, what does the market want to do here, right? If I could add some more confluence to that and see the possible rejection, great. But what's even better is now that I identified where that rejection is, that structure, if I'm rejecting this market, guess where I'm pushing it to? Level 1, level 2, right? So when you're able to identify these levels from the 4-hour down to your 1 hour, these zones aren't huge, right? And it's important for you to know where these levels are at, because if you're aware, like for example, with GU, this is my sweet spot right now. I'm interested to see what does it want to do, right? Because clearly it's showing me a lot of wicks. If it wants to break through, I know I can go to my next level of structure, but so far it's trying to show me something at this area. If it's rejection, right? I'm not saying it is, but if it's rejection, it's going to have a ball as it starts not only breaking my rejection, but now as it breaks structure, guess what it's going to want to do? Pull back. As it breaks structure, it's going to pull back. So structure helps you identify where the market might potentially reject off of, but also where you can target your moves to, right? So like, for example, looking at this GBP USD, we'll wait till it creates that break, but at least we got that structure identified. Where is this market pricing? You're always seeing the market react off of a structure, right? React off of a structure. right? Now, if you notice, remember when I was talking about react off of a structure with gold? You know, let's put it all together, right? The structure, guess what it did? It wicked, it reacted off of that structure. Now it's bullish, right? You would, if you were entering on that market, you would have been taking it from that rejection of that structure, which was this line right here, right? It just erased because that's where the market moved, and took in it structure, right? So the first thing that this pullback pips does is it helps you maximize structure, right? Looking at this market right now, just in the coincidence of where we're at with gold, I'm interested still because if it's going to pull back, this area, in fact, should be bullish, right? And all of this rejection, if it's going to be broken, well, I just need to identify where can it pull back to that's going to kick me up to my next level of structure. Now, I'm not saying it's going to move 200 pips, but let's just do some magic here since we're talking structure. All right. Let's start. Let's put gold up here because I'm not done with these other ones. We're just going through identifying some key things. Being able to go on these time frames, identifying where is structure at and why is it reacting off of it, right? If you know that this right here, this area, the market should not break below it, right? Because the market has already reacted off of it, right? This was the stop to grab all these people. And now my question is, does it want to create the motion, right? If it's already starting to create the motion to push up, now we can start to identify as you're going in, bigger time frame, scaling on down, where's that sweet spot for you to get in? If I'm looking at gold and if I know that I have that structure all the way up there in price, and this is where it's going to get neat because now I'm looking at where can this market potentially pull back to? Where if I'm looking to buy it, I'm only looking to buy it at a sweet spot because I'm taking it from structure to structure. You see what I'm saying? If you're looking at this market right now, these areas are where you're looking to buy at. You're buying at supportive areas. You're not buying at rejections because this is where people are getting out. If you remember, I was already in this on the wick. I would have already secured my structure level, gotten out of the trade, and now reevaluated my next setup, right? So that's the type of moves we want to be able to do. When it comes to this gold, I do want to see it pull back. If it can pull back and we can hold the nice 25 pip stop loss, look at that. That's a nice 20 pip stop loss. I want to see it react off of these supportive areas and push up. The reason that I like that move, and this is why pullbacks are important. Let me make sure you understand this. When you're trading the market, this is what happens. If it's going up, people get excited when it's right here, right? Whether if it's Bitcoin, whether if it's the latest meme coin, when it's all the way at the top, people are getting excited. But you know what's happening? The people who already came in, they're cashing out. When they cash out, guess what? It's driving the price down. Right? Guess what? If you're panic selling at this point, you're even driving it lower. What I'm saying is at this point, this is where now buyers come in because it's at that discounted price. You don't want to buy at the top. You always want to get in on something we call a pullback. If you can always maximize your pullback, let me show you what's important. If you know that this is a target and now you got in on the pullback off of this move, well, guess what? You first minimize your risk because you know your stops should be under the most recent low. Why? Because this is where everybody's stop is right now. So let's just place it slightly under, if anything, under this low as well, just if you want that extra cushion. But what's going to be better is when you catch a pullback and you set your analysis, the first place you're going to be able to go into is something we call structure, right? That's why I'm telling you, you need to know what structure is so you can first take your market to there. This is going to be my first target. Boom, structure of price. If you're in on the pullback, that already helps your risk to reward usually be like a 1-to-1 or obviously a little higher. Now, of course, by the time you get to your structure price, it should easily be more than 2, right? If you can really minimize it and keep it above 3, you are golden. And this is the power behind risk management, right? If you don't understand what risk management, or if you're not using a stop loss, you're already messing up your game. So looking at this gold, this setup right here, I'm only looking to enter where I can minimize and maximize, right? So you're going to hear that term. Where can I minimize my risk and maximize my profit? Looking at this market, we got some nice pullbacks. We got the 618, we got the 707 there. And then you got your basic 382 and your 50. If you notice, this is my only area of interest. And we're really going to cut it down into this area I had right here. All right. Now, if you look at this, based off of what I just said, right, looking at just how this gold is moving, you'll be able to identify we had it move up, it went lower, it moved up, and that's why I caught the pullback to push it higher, right? So now opportunity to pull back and take it higher. And the great thing about that is if you're able to catch it pull back, you're going to minimize your risk, right? And even that's why the pullback's important. Catch that so you can minimize that risk. And then the first place you're going to take it to is right back into structure. All right. So heck yeah, I'm A-okay with looking at this gold setup with the 20 pip risk. If I could catch it at my entry, right? I'll even give it 25, right? Because by the time that I push it right back into structure where it was already at, this is my first area to target, right? We don't need the indicator to tell us that. But if we're going to push it right back into structure, boom, that makes it a 2 to 4. So yes, if I do want to go and hold this long term and push it into the real structure of price up here, that's going to easily be like a 5 to 1, a 6 to 1. Look at that, a 10 to 1. Come on now. And why would I push it right back into structure? Because this was the move off of NFP, right? And now it just recently created a sweep, taking out those players. So yes, it can easily come up and try to take out these players. But best believe I'm making the move, minimizing my risk, right? If it breaks lower, I'm out of the trade. I'm not in the trade. We're done. But that's the type of mentality you got to have on all your setups, right? So let's go to UJ. And UJ, there's going to be some pairs that just don't look good. And you'll be able to identify it, right? Like looking at UJ, this is the 4 hour. It's so high. Leave it alone. If you want to buy this, you missed it, right? You missed it. You missed it, right? Literally, it literally was just chilling over here with some wicks. And if you wanted to buy it, you would have been looking to buy it over here. And that's the question I ask myself. If I'm looking to buy this chart, am I too late? Right? Because clearly, if this market was breaking up, it went up, it pulled back. 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 You should have already been buying it at some point. Leave it alone. Right? Because if we look to the left, we don't see anything, and that's dangerous. When you cannot reference price, you are in a danger zone. Leave it alone. Right? At least, and this is going to be a quick tip because you don't see this as often, right? When a market overextends, it's just going to keep taking people out, right? It's going to keep stopping them out. Literally, like right here, these players probably wanted to short it right here thinking it was going to react to the downside. Guess what? They got stopped out. These people right here who try to take it out on this low, guess what? The market just came back up, stopped them out. So guess what? It's probably just going to try to stop out these overextended players. Leave it alone. It looks bad. Now, the reason I say leave it alone and the only time I'd look at it is when it finally gives me more price. So for example, if this market goes down, guess what? We have structure. We now have a price reference to where we can not only take the market to the upside, but we have plenty of downside structure we could push this market to, right? So like right now, you're looking at the pullback pips indicator, and the biggest problem is, look, there is no structure to the top, right? That's why I'm not in this trade. That's why I'm staying away. Because yes, I know where I can take this market to, but until I can reference the rejection, I can't get in. That's why, unfortunately, right now, fam, leave UJ alone, right? GU, at least we got some reference to the top and the bottom, right? We talked about it. We discussed it. Now let's keep it real simplified. When it comes to GU, right now, you got to just be a little patient. What you got to realize is NFP is the first week, right? It'll be that first Friday. Sometimes, rarely, it's the second Friday just because of how the month is laid out. But right now, look at all of this hesitation. There's a lot of hesitation here. It wicked them out, right? And this was, hold up. This was NFP time. Boom, wicked them out. We got the structure of rejection. That's why I'm like, I'm going to wait on this trade setup. But I do like for right now, this is the only thing I do like. We got this rejection zone right here, right? Rejection, rejection, rejection. Here, 1 second. Just keep it just like that. And we can't do anything, right? We can't do anything on this GU right now. And the reason being is because it's consolidated, but we need to see what it doesn't want to do at this structure area. I'm interested because I wouldn't mind seeing it, 2 o'clock, 2:30, maybe try to fake out this area, create a wick, and then give me impulse. If that were the case, right, by that time, I'm starting to see the market, and I could now find where I could pull back and take it low. If we're pushing to the downside, we have these target areas of structure we can go to, but best believe when the market breaks through it, you're going to reference them, right? So like for right now, I would wait for GU, see how it reacts off this top level. This is as simple as it has to be right here. If it breaks higher, do not trade it, because then it's just going to keep trying to trap you and trap you and trap you, right? That's what it's been doing all this time. So I'm only looking for one move, and that's the fake impulse to the downside on GU. That's actually one that I'm going to keep in mind. You see, now if that's the move on GU, I got to look at my EG, because I know they'll go opposite. And this is what's happening with EG. Let's see. By the looks of it, guess what it's doing? It's just chilling that structure. So my question is, ooh, it's been ugly. Consolidation, consolidation. But I do have this zone of interest that I like. As long as it stays above that, that's good. Once it breaks below, no bueno, right? Because right now, all of this is serving as support, 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 which is great, which is definitely great for us. Now, if it wants to continue that support, yeah, we'll see it. We'll see it. And then we could target these structure areas up top. But once it breaks below us, leave it alone, right? Because what it's going to do is it's going to start to trap you, right? Like easily, if this bad boy gives you momentum, beware, because they'll just want to consolidate here a little bit. And then you might get the sudden burst where it drops and continues and takes out those lows. So I got to wait on this EG, but I do like my zone. I do like that zone reference where if you just identify this zone just like that and be a little patient, you'll be able to see how the market's reacting to this area. GCAD. You see, I want my GBPs to go down. So like this would be great, but the problem is it has already left the look at that. Look at that. You see this? That is hundreds of pips to the downside, right? A lot of people, for those who don't know how the pullback pips indicator, right? This is what we'll see, right? Let me make sure. All right. Let's do this. Let's get some rules out. When you're using the pullback pips indicator, you're using it on your 15-minute, your 30-minute, your hour. Let me say it again. You got your 15-minute, your 30-minute, and your hour. Now, when you're only using it on those 3 time frames, your pullback, your bias, the background color that we have, which right now is red, is only going to be on 2 time frames, either the 1 or the 2. I'm going to help you guys just take your intraday trading to a whole nother level right here. All right. So it's either going to be on the 1 or the 2. Now your 2 is your bigger trend. So when you are trading on your 1 hour time frame, your 30-minute, that 2 hour is going to be lethal. Now I want to run a back play just so you guys can start seeing how this indicator is going to start to react. Because when you're looking at the market, you're always seeing, hey, where's this structure? How is the market reacting to it? Right? What is the bias? As the market is like, even when an Enigma trade comes out, the first thing I'm going to do is I'm going to grab my information and I'm going to plot out my Enigma trade setup, right? So like usually you'll get an alert. It'll be a 3-to-1, boom, right? It'll look something like that. The first thing I'll do is I'll not only plot it out, but I'll ask myself, okay, based off my pullback pips, if my bias is bearish and the Enigma trade setup is also bearish, where's the best entry I can get in, right? If that's where Enigma came out, I'll place my parameters. Now, as this market is moving, You know, in this case, it did do exactly what it needed to do. But what you're also noticing is as the market is breaking structure, look, it just broke that structure. Watch how it pulls back and rejects off of that structure, right? Allowing you to look for the market to sell off of, right? And you saw it multiple times. You saw it as it pulled there, as it pulled here, catch your setup, right? Something as simple as that. Now, fast forward, unfortunately, looking at GCAD, it's not good for us right now. And the reason being is because it's already moved hundreds of pips to the downside, all right? If you look at it right now where it's currently at, it's in an ugly place. It's not too nice for us, all right? And on the 2 hour, look at our pullback pips. It's telling us to sell. It's no good. On the 1 hour, it's telling us to sell. Guess what? I can't do anything. I do like to sell, but if I were to sell it, the only place I would sell it at is around this area up top, right? And you know why? Because when I'm looking to sell, I'm going to reject off of some of my structure. I'm going to reference it to place my stop loss, and then I'm going to be able to take it to my next level of structure. And if that number is above 3, you know I'm taking the trade, right? So like right now, it makes no sense to try to look for a sell because I look at my structure reference. I'm not going to place my stop loss all the way above there. Nope, not me, not I. Especially if that risk to reward is not even positive. Look at that. Like what? It's not even 1? No bueno, right? So there are charts that you have to eliminate. You got to say, listen, it's not time right now. Ooh, let's talk about EU. All right. Hopefully you guys are understanding a little bit of this process, right? Now let's put it all together. The first thing that you should always be doing before you grab your pullback pips is you start off on your 4 hour and your daily, right? And the first thing you want to just be able to ask yourself is where is structure? Where is the market holding in price? So looking at this Euro USD, you see that we have this rejection, right? We have this rejection, these wicks. Now to the upside, it has plenty of space as well, right? Now, if you look at this chart, we have the structure. We have the structure. We have our structure, right? Let me grab our pullback pips indicator. And I'm just going to, before I grab the pullback, I want you to just see. Do you see the resemblance? Like literally, do you see how the structure I identified as the structure that the pullback pips identifies? You're going to start getting used to it. A systematic approach, right? When you understand the purpose of now your structure, what is Euro USD starting to do by the looks of it? Well, it looks like it's starting to break some of this rejection in structure, right? That means I can easily pull to my next level. So let's hold up. Let's go into our 30. Let's go to our 15. And let's see what's happening here. Because we have these nice areas, area 1, area 2, area 3, that helps us identify where we're looking to take this market up into. We have these structured areas in price, which are helping us identify we should be bullish off of it, right? So looking at this 30-minute time frame, let me just keep it real simple. If I were to get into this market, right? And I hope you guys can already start to see the momentum. Ready? Market went up, it pulled back. It went up, it pulled back right here. Boom. And now, guess what? It's trying to figure it out. But already before all of this, this is already telling me it's time to take it higher. And then I'm going to pull back and take it higher. You're noticing I'm always taking it to structure, 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 right? So looking at this EU, I like it a lot. You see, we have people who came in up here and they had to deal with all of this hesitation, drawdown, consolidation. But right now, when we grab our pullback pips indicator and we grab our background color, boom, you see the bias, we're bullish. So what that means is we're looking for a bullish setup, right? So if you're looking for a bullish setup and you're looking to buy this Euro USD, yes, we have our structure of where we're looking to target, but where are you looking to get in? So you can use various things. You can use your Fibonacci tool. You can use just basic price action, right? And what you're going to realize is this area that I have identified with my zone is my area that I want this bad boy to react off of to the upside, right? Just some very basic things. All of this rejection, 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 rejection. Now it's going to turn into support. So clearly, if I can get an entry around this area for support, I could take it up into my levels of structure to the upside. And I know for a fact, if it's above 3, I'm taking the trade. So like, for example, let's just look at something like this. I have my target, boom. I have my potential entry, which is within this zone, and my stop loss is under it. You see that number? If it's, yes, it's above 3, I'm taking the trade setup, right? So even if I was entering at this high up here and I had to place my stop loss, that number is still above 3. Yes, I'll still take the trade setup. Now, the only problem between those two trade setups is clearly if you can get a better entry within the pullback, it helps you to get more reward out of your risk. And that's what you guys always need to do. Start with a 3-to-1, but always try to get higher, because if I could find 5-to-1, right? Right now it says 5.7. But if all of my trade setups were 5-to-1, like that, here. Let me know. Let me know if you know the answer. There's a simple answer. All right. If you have a 5-to-1 trade setup, right? So for every dollar you're making 5 potentially. What percent do you need to be accurate to be successful trading? Give me the answers. How accurate do you need to be with the 5-to-1 ratio? Do you know that answer? You see, I need to know. Do you drop the comments? Drop in the comments. And for those people who don't know, I'm gonna prove it to you right now. I don't know if it's gonna be in my favor, but I know that the numbers don't lie. So right now I'm just looking over here in the comments, and I'm just gonna give you guys, if you have a 5-to-1, how accurate do you have to be? And I'm gonna show you that with a calculator that breaks all of the analytics down. Because from day one, you should know your stats. You should know how you're doing. That's why we document, so we know what's right, what's wrong. Just by blowing accounts, you're not going to identify anything, because maybe you just over leveraged the one trade, right? So someone said 20%. So 20%, let's actually come over here and let's do that activity, right? So this is a calculator that we're going to use. And for example, let's just put a $50,000 account, right? And you're risking, when you're looking to risk, you're looking to risk maybe 0.5%, 1%, excuse me. Everybody in the industry is saying, hey, risk 3 to 5%. But that's because they're risking their personal capital, right? When you're trading funded accounts and you risk 5% and you lose that 5%, guess what? You just lost your account, right? So you got to understand, when you're trading a funded platform, you got to risk less. But since you have more volume, guess what? You can still use big lots. So risk, 0.5%, 1%. But let me just show you guys, if we're risking 1% and our risk reward is 1 to 5, right? And our percent profitability, someone said 20%. Let's run those stats. By the end of 200 trades, these are going to be our stats. Right? So if you were 20% profitable with a 5-to-1 on all of your trade setups, because that's what you're systemized to do, you will still be profitable in this scenario. Now, you won't be profitable in all scenarios. Here, let me run the stats. You're going to rerun it, because these are automatic, systematic, right? But people don't want to be 20% accurate, right? Look at that. 20% accurate, your 50,000 is at 64,000. People don't want to hold themselves accountable. Look at that. You might look, I wanted to show you this example right here, because at 20%, you're going to break even, right? Or barely be profitable. If you're lucky, you'll see the profits, but then you will have times where you do lose, right? Like this. That's why it's important to be 25% profitable. Somebody asks me, 25% profitable, 30% profitable. Look at that. You're 30% profitable. That 50,000 will go to 163. 20% profitable. No, this one's 25% profitable. When I'm trading, I'm already saying, I've already seen my stats. I'm 65 to 75% profitable. That's why each and every month, no matter how I trade, each and every month out consistent and profitable. Consistent and profitable because I know my R to R, I know my profitability, right? And I want to show you this because when you're using the Enigma system is a 1 to 3, right? When you're using the Enigma system, the profitability is literally 60 to 70% profitable. You can go into the Enigma page, and I believe Nas did a back test on it where he shows you the exact stats of the Enigma system. And I believe it ranges on the different currency pairs, but the profitability at the least I think I saw was 60%. So when you're using a system that's giving you the consistent profitability and the consistent risk to reward on each and every dang trade, this is what happens. So what we need to do is condition ourselves to stop thinking like everyone else and be 100% accurate. Stop over leveraging your trade to be 100% accurate. Because look, if you use a 1 to 3, guess what? You could be 40% accurate and you'll still be profitable. That means out of every 10 trades that Enigma sends out, you're going to lose 6 of them. You're going to win 4 of them. And guess what? At the end of the month, you'll be profitable. And if you understand this, you see how simple this system is? You trade the right pairs, you trade the right risk, you trade the right volume, and now you're in the game. But the problem is people can't be in the game because they don't know the game exists. They don't know that they're the ones getting played in the game. Look at that. And I'm just showing you the stats over and over, rerun 200 random situations of trades, but the stats will remain the same. And each and every month, if you're using proper risk management, and look at that, this is just 40% profitability, you'll still win. Can you show yourself? Can you truly document that? So let's look at this Euro USD, right? Where do I want to get in? I want to get in down here, right? I want to see this bad boy pull back, right? If it could pull back and maybe take out some of these lows of structure, that'll be great. But if I can get a nice pullback, I'll be easily looking to target some of these highs, right? And the key thing is with that move, I'm going to minimize my risk because I know the higher the risk to reward. Let me say that better. The higher the reward to the risk that you're using, the less accurate you have to be. Right? I remember there was a session I did last week where I gave out 5 different analysis, but each and every one of those 5 analysis were all 5 to 1 risk reward, right? Guess what? 2 of them hit and did 100 pips. One of them, stop loss got hit. One of them didn't even get activated, but each and every one of those trade setups was a 5 to 1. It's already systemized. I already know my numbers. If it's a 1 to 3, I know I got to be at least 35% accurate, right? Ooh, let's look at this gold. Look, you remember that gold setup I was talking about earlier? We're going to finish everything else. But look at that. What's this R to R? 10. Even if we don't take it up there and we just take it to structure 1 and we're holding it at this entry with the 20 pip stop, it was already about a 3 to 1 already right there. You see, I got to take the trade setup, even if it's pushing it right back into structure because my risk to reward makes sense, right? So those are actually 2 trade setups I like so far. I like that gold. I like that Euro USD. Let's talk about Swiss JPY. Leave it alone. Leave it alone. Why? Why? Look at this. Look at this. Look how simple this is. Ready? You already saw the JPY-UJ pushing up aggressively. But if you were looking at this entry, if you were looking at this market, right? And let me just come over here. Are we on the 1 hour or are we on the 2 hour? Okay, that's the 1 hour. We're bullish. Let me see the 2 hour. Boom, right? Now I'm going to give you guys the sauce, right? When I'm on my 30 and my 1 hour, I watch that 2 hour time frame, right? Because the 2 hour is that strength, that trend. The 1 hour is still great because you're still intra-trading within that session, right? That's why the 1 and the 2 hour killers, especially. Right? But if you still know that you're bullish, look at this. You see how it's breaking all of this structure? We're still pushing that market to the upside. right? All of these areas that were once rejection, especially seeing that in the past, especially identifying that you're in a bullish opportunity, now only gives you the question, hey, where can I pull back to take it higher? Where does this market maybe want to reference this as a resistance that was in the past, but now possibly supportive? You see, when you identify that zone, you have that reference area you're looking for to take that bad boy to the upside, right? And if you notice, once it broke up here, guess what? It pulled right back, tucking it up, right? And if you notice, look, let me show you guys something. Let me show you guys something. Because when you put it all together, just watch the sauce. It's gonna get saucy. Structured resistance gets broken. Ready? Boom. At this point right there, that's everything you needed to see that this market is already ready to pull back, take it higher. All right? Taking out those individuals, those players who thought it was a seller's market. No. We're bullish. Buy that bad boy. Make it make sense, right? If you're entering at this market, no matter where you're entering, you always got to have a stop loss, right? If you're identifying your chart, look at the past and see where it's moving, right? I probably wouldn't have gone in on that bad boy because I didn't see any. Let me see real quick on my 1R. Structure. No, I don't see it. If I don't see it, I'm not taking it. I need to at least have an area, if not, and that's the problem. Like, everybody would have been looking for that market to sell. But guess what? It was just trapping them and playing the buy. And if you're able to understand that and minimize your risk, no matter the setup, you're going to win, right? You're noticing a lot of my risk is only 25, 30, 35 pips, right? You don't need a 100 pip stop loss. You don't need a 80 pip stop loss, right? If anything, you got a better entry. So right now, Swiss JPY, we got to leave it alone. EG, we talked about it, right? We've definitely came off of a nice bearish move. A lot of bearish action. We've been talking about it. Look at that. You would have been looking only to sell. Look at that. Imagine that. Imagine this, right? Imagine using this 30-minute time frame, identifying you're now bearish, and seeing the market now start to break that to the downside. Well, guess what? All of that broken area is now going to be referenced for you. If you notice, every entry has an exit. I need to know it, right? Because even if I'm looking to enter, I'm still having my risk to my reward, right? I got my target 1, my target 2, my target 3. If this is too high, I got to do one of two things. I got to minimize my risk, so at least it's a 3-2-1. If it's at least a 3-2-1, I know I could take 10 swings and at least 3 of them have to be right. Right? That's all it is. And if I see the setup, I'll take it. But what you notice is, guess what? That rejection we had to the zone was what we needed, right? So now as this market is rejecting that, let's take it down, right? So that's always a question I ask myself. Could I have gotten in? Where could I have gotten in? How can I minimize my risk? Because best believe, once I know where I'm taking it to, down into structure. Simple. All right. So right now, when it comes to EG, fast forward, we are talking about it. I'm waiting to see what it wants to do. Clearly, it's been bearish. Leave it alone, because what this market could easily do is just trap and overextend. In that case, I would wait, because today's not the play for that. Let's look at these last 3, and then we'll be done for tonight, family. Yeah, I like this AU. Let's see which one. Ooh, let's talk about 2 of them, because these 2 look good. All right, so let's start off. We're going to run it back one more time. We're going to start from the beginning, right? Everybody knows we always start off on our 4-hour. We start off on our daily, right? The reason we're doing that is because we need to see where's the market at relative to where it can go, right? If it clearly can't go anywhere, we don't know where to analyze it from, right? So if you notice here, one second. we need to be able to know what structure is, right? Where is this structure located in the price? So like, for example, just some very basics when it comes to this AUD USD, what do you think it's starting to do? Break that structure. So I'm interested because all of this area that was resistance should be an interest area for me to be supportive, right? So if you're noticing, as I'm breaking it down from the 4 hour to the 2 hour to the 1 hour, I'm still seeing what it's doing. And as you can see, look what it's doing. These lows are casually going up. So technically what the market just did, if you don't know it, guess what it just did? These players just got wicked out. These sellers who thought it was here not only got wicked out. Look at these sellers. Just got wicked out. Don't sell this market. Why are you trying to sell this market, right? No, don't sell the market. Grab your pullback pips indicator. Make sure that you're on the 1 hour and the 2 hour. And you're going to notice we should be bullish. Here, hold up. Boom, we're bullish. And since we're bullish, guess what setup I'm looking for? I'm asking myself, where can I move this market to? And that's why you always want to identify your structure so you can push it to specific areas. But based off of everything I've been saying, I'm saying reference what you do have. So what does that mean for me is, okay, where can I pull back, right? Where I could possibly minimize my risk, right? Maximize my profit, and at least, hopefully, if I did that right, the number should at least be above 3. Yes, that hits all of my check marks. You see, I'm checking the mark, checking it all off. Is the pullback pips bullish? Yes. Am I at a nice area that's still confluent with my analysis? Check. Does my risk to reward make sense? Check. Am I trading it at the right time? Check, right? So if you notice, this is straight pure bullish on opportunity for us to catch the pullback and take it on higher. I like that AUD USD. It looks really good. NZD Swiss, I see that we're bullish. And this is actually interesting because look, you see what it just recently did? Reacted, right? And I like it because if you notice that that area that was supportive, this whole area has a story, right? Man, I remember one time it was rejection, and then it broke through. Once it broke through at that rejection, I told myself it was going to be support, and then support. If you were listening to that story and you would have just known that, you could have gotten in on the buy, pushed it up, gotten in on the buy, pushed it up. Okay, it broke it. Once support is broken, guess what it turns into? Resistance. That's why when it came back here, it resisted. So now that it broke through that resistance, guess what? We're supported. If you understood that, simple stuff. Now you know what we're doing to this market. Now, simple as this, market should not break below that low, giving me this area of interest to take it higher. I like this trade setup for 2 reasons. The first reason is, first off, we're bullish on our pullback pips. Second reason, we already broke this trend line. So what that allows me to now do is ask myself, where can I catch a pullback, right? That's in an interest area. This is my interest area for those who don't know. And if you don't know, I'm gonna have shoot me a message. We'll get into it, right? So let me just change the color. And just from that right there, if I can get in and I could place my stop loss under that, you see, under it, I'm going to take it first to my first level of structure. The rule is when you take it to your first level of structure, it should easily be more at a 1-to-1, 1.5-to-1. Because if you're doing your R to R right, by the time you hit your second structure, you'll be at 2-to-1. By the time you hit your third structure, minimum, you'll be 3-to-1. And if you did this right and it's higher than 4, guess what? You don't have to be as accurate as long as you stay consistent. All right? So at a minimum, when I try to look for my setups, I need to at least have a 3-to-1, right? It doesn't matter the pair. It doesn't matter the time frame, right? The same way that you can intraday is the same way that you could scalp, the same way that you could swing. You're always going to have an R to R where if you minimize, you're going to be able to maximize. And by being able to find those areas and key points, NZD Swiss is good. I like it. I'm gonna keep it up. Boom. So honestly, some of these charts look really good. I know we talked about gold. We talked about, if you look at that, what bias is gold, family? Bullish. So since it's bullish, take out those players and get bullish. It took them out. Now we're going bullish. Now we could take it to structure. But the key thing is, look at that. Does my R to R make sense? Yes, 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 yes. I'm trading gold, right? Now, the only question I have with this move right here is where are the players that don't know they're getting played? I like it just like that, because it already happened earlier right here. It already happened earlier right here, right? And what I mean by that is, for the people who thought that it was smart to trade when the market started news and at 8:30 it finally kicked up and they wanted to get in this market and now buy it, guess what? They're stuck. They're stuck. They're stuck. If they didn't get stopped out, guess what? They're still stuck. Not I. I saw the fake. We catch the move. Let's see if we can catch minimal risk on the pullback. That will help us a lot with this gold. And when it comes to it, look, this is simple because these areas of structure should be supportive, right? The bias, the background color is never going to change because it's on the bigger time frame, right? So since it's on the hour, it's on the 2 hour, now we can go in on the 5, 15, 30 minute, right? If that's your mojo, and get your trade on, right? I already know, and this is probably a different curriculum, a different live. US 30, gold, and cryptocurrency all have different market conditions, especially comparing it to Forex. So know the pair that you're trading, right? Know and understand the pair and the quality behind it and some of its moves. This is my only play on gold. If I can catch that pullback rejection, you already remember from there, we minimized it to right there. Boom. And the reason I say that is because if you look at this chart, I'm interested in these people right here. And I say these people because that was actually me a moment ago, right? I got in here. Take your 50 pips. You should have gotten out. If not, I want the market to come back and try to take them out, right? If you were up 50 pips and you didn't grab your profits, well, guess what? Let's try to take you out, take out these players. Not only these players, but these players here. That's why I got my zone. Because it's going to be something as simple as a wick. Ready? You see what it just did here? A wick. Boom. Take it out, create a bias, and now pull back and take it up. If I would have saw it earlier, right, pullback entries would have been on here. But since I caught it later, pullback entry was still there. Bias is still correct, right? So when it comes to this gold, R to R wise, I'm looking at some type of pullback, place your 20-25 pips, and then easily take it into the first level of structure, which is going to be good on the R to R. And once it breaks through that, I hope it does. If it doesn't, it is what it is, because we know that's rejection there. But if it does break through that, it'll easily move it into a 4-to-1, 5-to-1, 6-to-1 trade setup. And then guess what? Same thing. When the market is trending, just catch the pullback, right? Look, the market went up, it pulled back. It went up, it pulled back. It went up, it needs to pull back. So when it goes up, take your profit, secure it, move the partials. So now when it does pull back, you're not worrying about the balance going lower, you know, your profits that you could have secured, right? You're waiting on the next setup. Where can I minimize to maximize, right? So no matter the setup, make sure you got the R to R that's making sense. GU, let's see. We're bullish on GU and I like it. I like it a lot. We didn't do too much talking on GU, but look at this. I wanted to see the rejection here. And this one I might just have to wait and see. But what I just did is I'm identifying these two levels of structure. What is the market doing? It's consolidating. When the market's consolidating and it's moving sideways, I just want to know, where is it going to reject off of? The good thing is, at least with our pullback pips indicator, we know if we're bullish, we're looking for rejections right here, right? So just imagine, according to GBP USD, right, at the moment, we're bullish on the pullback pips. If I restrict all of this, this is something we call a very basic trend line. Everybody should know, right? That allows the market that if it wants to come to this area, it should go higher. You see how I'm putting this setup together? Because I want to see the rejection, or I want to see the reaction to this structure, but you need to identify your bias ahead of time, right? So we know what we're looking for. Because if I'm looking to push it into my first level of structure, remember what we said? We place our stop loss below. We place it our first level of structure. My first target, if I find this bias, is a 3-1. If it does want to overextend and take out some more of those players, I'm okay. That right there makes it a 7-1, right? I like GBP USD. I do like it a little bit more cleaner now that I pulled out the pullback pips on it, because now that I see it, I see that we're bullish. You see the market going higher, pulling back, going higher, pulling back, right? So it could easily go and break that high. Give me a slight pullback, breaking some highs. Now, the key thing is for right now, this trend line is going to be the saver. Ready? Outer trend line, that bad boy, right? And as long as the market can stay above this area where I'm going to reference my entry to have my stop loss below and go to our first level of targets, right? We're going to be able to do some damage on the R to R, especially when it overextends, right? Because once it overextends, it's going to just continue pushing into your next level of structure. That's why I always have structure 1, structure 2, structure 3. 3 targets, always reference areas to take out. EU. EU, I know, let me see. Let me go to my 30. If I'm not mistaken, on the 1 hour, we just turned bullish, right? And that's why I like to make sure, because with this case, I know we're starting the push on the 1 hour, still trading off our 30. So that's great. This pullback is coming, it's starting. And what I like about it even more is that we can minimize if it's right. Look at the rejection off of this structure support and try to push it to the upside. If we can get that, it's game over. Now, if you notice, I'm going to look for those moves predominantly, of course, during London session. But if you notice, gold, GU, EU, and AU all have potential bullish opportunity. So what that means is I need to understand that with those currencies, if I'm trading it during the New York session, I need to be watching. I'm talking about like the DXY. I need to know what it's going to do, that dollar index. And the reason I say that is because if I want those pairs to go up, that means I want my dollar to go down, right? Let me say that again. If I want those pairs to go up, it's because I want my dollar to do the opposite. By the looks of it, what does the pullback pips tell us, right? Here, let me grab my pullback pips. I'm going to put it on my 30. I'm going to put it on my 1 hour or my 2 hour. What is it telling me on my 2 hour? We've been bearish. What is it telling me on my 1 hour? It looks like we're bearish, right? So that allows me to identify, I like it. I like it. Because I don't even need to grab the pullback pips to help me identify this, but I like it because I want to start seeing where can we see some rejection, right? If that dollar wants to drop it, EU, AU, NU, gold will push up. So, and that's because of the correlation, right? And it's crazy. I got to drop some sauce on correlations another day. But family, that is the breakdown. With that, I would be patient with some of these trade setups. The ones that did look like they were looking good, all are above a 3-1. Look at that, 5-1 on that one. We got 5.5-1 on that one. Let's see what GU is. GU is a 7-2. Wait, hold up. Let me bring that back. I think it was easily a 3-1 right here. Yeah, there we go. 3-1. And then gold, I know we have that. That was easily a 3-1 that we're looking at to easily move into 10-1 profit. Right, family? So I appreciate each and every one of you guys on here. Do me a favor. Right? I want to do something special, because August, it's crazy. We're already in October 10th, right? So in August, I told myself I want to document each and every day going through this process, showing people how to tap into these elevated resources with the proper tools, with the proper capital now, right? So we can elevate and get funding, right? So, that's allowed me to knock out this this challenge process. I'm in the process of getting verified, but I want to make sure that we run it back because, there's so many opportunities for everyone. So please, I want everybody, if you're on this call, grab your success manual, right? And you'll see me, I'll be in the trade talk in there, but grab this bad boy. And each and every one of you guys, I want you to start off and hold yourself accountable, right? From day one, we identified the biggest problems people face when they're trading. They don't know how to properly understand the capital involved, right? Some people are not budgeting the right way. Some people are not understanding the true essence of why they're doing this, right? They don't understand it. So if they don't understand it, they don't take it seriously. But remember how earlier we were talking about how you're happy and grateful that money is coming to you in increasing quantities from multiple sources. You see, inside Elevated FX, not only do we have 5 different ways for you to earn an income inside our ecosystem, but with the opportunities to get funded, you're literally going to open this space for more capital, more volume, rather than trying to work $1,000 and do 10% and only make $100. How about you do 10% on $100,000 and become a 6-figure trader by using the right skill set, right? So that's the type of energy I want to bring into you guys. But with that, even as I have this new book, I'm still putting down my schedule. The days that I'm having my webinars, the day that we're doing Wealth Wednesday, the day that I'm on with Haitian Sniper, the day that Institute Trader is on, whenever, even Andre, when he has his COT analysis, tomorrow he's going to have his COT analysis. You need to hold yourself accountable and identify what you're doing with your time, what you're doing with your money, what you're doing with your mindset, and how we're going to get to these goals. So family, I know we went a little overboard. Holy cow, it's 10:45 already. But, I definitely feel, we had to jump into the sauce because each and every day it's a systematic approach. Each and every day we express the gratitude. Each and every day we understand what the end goal is in mind. Each and every day we have a checklist to why we're entering our trades. And if you're not doing this, that's why you're not seeing that consistency, fam. So I appreciate you guys. If you love this video, throw some hearts in here, throw that energy, get your family on the next one, because best believe we're just getting started. So I appreciate you, fam, and I'll see you guys on the next one. Take care.